So my name is Rex Bellington, and on this video I'm going to talk about PDRAs, which is premium discount arrays. Okay. So on my last video I was talking about market structure, where I was teaching people what higher highs and higher lows are, and what lower lows and lower highs are. So something like, if you watch this chart right now, you see we are moving in an uptrend. So what will show that we are having what a uptrend, okay, it's when you have what there's some kind of what higher high, higher low, higher high, higher high, higher high. Okay, we have higher lows here, higher low, higher high, higher low. Okay, yeah, something like that. So we keep on moving in a what in an uptrend. Okay, so if maybe you take this one here, you go like this, then you come here, come here, come here, come here, here, then here. Okay. Um, I'm sorry. So as I was saying, you have something like this. Okay. You keep on moving in a what in an uptrend. You understand? So you see, this is what I call it a bullish impulse swing, or a bullish market trend to the upside. Okay. So today I'm going to talk about PDRs, which is premium discount arrays, which is a very important thing for you to learn in this industry. So what are PDRs? Okay. So premium um, premium discount arrays. So you can call them um, PD arrays. Sorry. So the first PD array we'll be talking about are what swing highs and swing lows. Then we'll be talking about order blocks. Okay. We'll talk about fair value gaps. Okay. We have breaker. I'm sorry. Breaker blocks. Okay. Swing highs, swing lows, order blocks, fair value gaps, breaker blocks. There are a whole lot of PDRAs, okay, but the four most important PDRAs that I like to use, or I want the people to know, is swing highs and swing lows, order blocks, fair value gaps, and breaker blocks. Okay. So um, okay, so what are swing highs and swing lows? Which is this first one? We are tackling the first one. I told you the other time when I was about to end the other video that a swing high is formed when you have a candle on the left, okay, which has a wick, and there's another candle in the middle. Do you understand? Which also has a wick, and there is a what? A third candle on the left, which also has a what? A wick. Do you understand? But just that what? The two candles on the side, the candle with this wick and this candle here with this wick, their wicks don't surpass the middle what wick. Therefore, we call this area here what? We call this area here what? A swing high. Do you understand? We call this area here what? A swing high. Swing high. Swing high. Okay, so swing high. Do you understand? Same for when you have a bearish candle. Okay, then you have a candle on the left which has a wick. Then you have another candle in the middle which has a what? A more longer wick. Then you have a what? A third candle which has a what? A wick. But you can see that this third candle's what? Wick, and the what? The first candle's wick, they don't surpass what? The middle one. You see, the middle one is the longest of the three of them. Do you understand? Therefore, we call this thing what? We call it a swing low. Swing low. Okay. So sorry. So I'll say this is a swing low. So we have a swing high and we have a swing low. Okay, so let's go into the chart and search for them. So let's come here. Okay, when you come to this area here, you see this candle where my mouse pointer is. My mouse pointer is the red thing. Sorry, my mouse pointer is the red thing. You see where it is, and you see this um black candles wick, and you see this green candles wick, and you see, let's say this is the first candle. This is a middle candle. If you take three candles, let's say if you take three candles that I've printed, okay, this candle's low, this candle's low, and this candle's low. There is a low here, but just like it doesn't show, there is a low. You can see that this black candle's low is the lowest of what? One, two, three. One, two, three. The black candle has the lowest of them. So here is a what? We call this thing what? A swing what? A swing low. Okay. We call it what? A swing low. So um sorry my okay. So we call it a swing low. Now let's take here. You see this candle here, it's low. And you see this black candle's low and the green candle's low. You can see the black candle's low is the lowest of them all. Swing lows doesn't have to be one black candle, two green candles, or one green candle, two black. No, it can be two green candles. It can be three green candles, three black candles. It doesn't matter the color of candle, whether it's red or black, no, or whether it's bullish or bearish. A swing high can appear in between what? A swing high can appear in between what? Two bullish candles. And a swing low can appear between what? A swing low can appear between what? Three bearish candles, and a swing high can appear between what? Three bullish what? Candles. Do you understand? It doesn't matter if the candles are all green or the three candles have to be green or black. It doesn't matter. The fact that the middle one's high is higher than the one on the left and the one on the right, then it's a swing high. That's the same way the fact that the middle candle's low is the lowest of the candle on the left and the candle on the right. It's a what? It's a swing low. Do you understand? So if you take this candle here, you see this candle's low, then this candle's low. If you take all these three candles here, one, two, three, they are lows. Now you can see that this candle here is the lowest of them all. If you take, let's say, this area, you see this candle here, where my mouse pointer is, this candle. If you take this candle, then if you take this candle, you can see that what? The middle one has the what? Has the highest of them all. So this is how you search for swing highs and swing lows. So if you see something like this where the highs are the what? The highs, like the upper wicks are the one with the what? Like the upper wicks have the highest highs, that's a swing high. But if you see the ones where the lower wicks are very long and they are lower than the ones on the left and the ones on the right, then that's the what? A swing low. So that's how you're able to know what a swing high is and what a swing low is. If you don't understand, you can what? Go back, replay the video again, keep on watching and listening to what I say. Do you understand? And surely you get it. So now let's go to what another block is. Okay. So sorry, I have to take out those things. Okay, I'm coming in. So another block, okay. Another block is something that um, a lot of people actually use very much. But me, when I'm analyzing price in real time or when I'm analyzing price to make money, I don't use other blocks. Okay, the only PDRs I use are swing high, swing lows, fair value gaps, and breaker blocks. That's the only thing I do. I don't use other blocks. But some people find other blocks much more interesting. Okay, and other blocks works for them. In this industry, you need to find what works for you. Just because I use swing highs and fair value gaps and breakup blocks doesn't mean you should also be using the same thing. You can master other blocks and what become very good in it. Okay, so when we talk about other blocks, okay, when you have a movement like this where price keeps on going high, going high, going high, going high, going high, okay, when price keeps on going high like this, okay, you see this is a bullish impulse move with a bearish short retracement, bullish impulse move with a bearish retracement, bullish impulse move with a bearish retracement. Okay, so this is a whole bullish impulse move with what some small minor what bearish retracement. You understand? Okay, now let me add one thing here. So sorry, okay, let me do it like this. um I want you to understand very well. So okay, let me first say the definition of what an order block is. But I'm going to talk in terms of two things: a bullish order block and a bearish order block. When we talk about a bullish order block, okay, a bullish order block, it is the last bearish candles, the last bearish candle or candles. The underlined words are candle or candles. The last bearish candle or candles before the what? The up move. I don't know if you understand what I'm saying. Keep replay the video, then you get me. The last bearish candle or candles before the up move or before the what? The impulse move, the bullish impulse move to the upside. That's the same way when we talk about a bearish order block. It is the last bullish candle or candles before the down move to the downside, or the bearish impulse move to the downside. The last bullish candle or candles before the what? The down move to the what? To the downside, or the bearish move to the downside. So this is what I mean. You see, we have an impulse move to the upside here. You can be having a what? An order block around this area here. Do you understand? Where price will come and what? Retest what? Retest the order block. Okay, like where what this thing is doing, retest the order block, and after retesting the order block, it goes where? It moves to the upside. Let me find it in real time. I think if I find it in real time, you get it. So you see, price is moving. The whole of this is what? Up, down, up. So some kind of what? Lower low, higher high. You see, this is a lower low, lower high, lower low. Then we have a what? A higher high, higher low, higher high, higher low, higher high. So we've changed from what? A bearish trend to what? A bullish trend. Do you understand? Okay, so as I was saying, when we talk about a bullish order block, it's the last what? Down close, or the last bearish candle or candles before the what? The bullish what? Movement to the upside. So you see, from here to here to here to here to here to here, like the whole of this is a what? It's a bullish move to the upside. Do you understand? But you can see we have what? Some candles here. Do you understand? One, two, three, four. I told you it's the last what? Bearish candle or candles before the what? The move to the upside. So if you select from here to here, we can call this what? A bullish what? Order block. Do you understand? I would refer this to be my what? To be my bullish order block, because price closed above it. When I talk about price closing above the order block, sorry, when I talk about price closing above the order block, this is the highest part of the order block, okay, and this is the lowest part of the order block. You understand? If you take the whole of this leg from the high to the low here, this is the highest part, the highest portion of the order block, and this is the lowest portion of the order block. Do you understand? I think I should make it like this here, because the green one is not part. It's the whole. I told you it's the bearish candle or candles, and this green thing is a bullish candle. So this is the lowest portion of the order block, and this is the highest portion of the order block. You can see price closed above it and gave what? A fair value gap inside. Okay, making it a what? The fair value gaps are even two. There is one here and then there is one here. Okay, and I'll teach you what fair value gaps are. Okay, that means it's a higher probability order blocks. So let's look for another other block. This another block, this thing here. This another block. Okay, this another block. Okay, it's the last bullish candle or candles. You can see this one is what? It's a what? It's a candle, because the reason why I'm not adding these two candles to it is because of this green candle. It has come to separate them. So it's going to, this is going to be the last bullish what? Candle, not last bullish candles. You understand? So now this two is another block. Okay, because you can see this is a what? Impulse move to the what? To the upside. So therefore the last what? Bullish candle or what? Candles. Now this is going to be what? Bullish candles, because there are two of them. Do you understand? The last bearish candles before the up move is a what? It's a what? It's another block. Okay, when we talk about what? The what's the name? The bearish part too, we can see that what? This another block. Okay, because you can see that what? They are the last what? Up close candles, or their last what? Bullish candles. So this is the last bullish candle or candles. So this is the last bullish candles before the down move, before this down move, this down move. Okay, before this down move. So the last bullish candle or candles, then this down move comes, and therefore this is called a what? Another block. Do you understand? Yes. So we can also call this another block. This another block. Okay, this another block. Okay, you see, price goes above, close above it, retest it, then that's what? Fly up. You understand? That's a nice other block. You can have more other blocks, and the reason why I don't use other blocks is I, um, I'm not. You see, everybody and what they like. Do you understand? Yeah, I can't say it doesn't work. Someone will also tell me that what they don't like fair value gaps or swing guys or swing lows. Do you understand? Or they don't use breakup blocks. Everybody and what works for them. Do you understand? I would say okay, other blocks don't work for me if I'm being sincere to you. Do you understand? But fair value gaps, swing guys, swing lows, and breakup blocks, I'm very, very good in it. Do you understand? Yes. So now that I've taught you what other blocks are, and I've taught you what swing highs and swing lows are, the next thing that I have to teach you people are what fair value gaps. Okay. When we talk about a fair value gap, it's a gap that provides what? Fair value to what? Willing what? Buyers or what? Willing sellers. Do you understand? So when I talk about a fair value gap, this is what I call a fair value gap. Okay. You see this candle here? It's wick. The wick of this bearish candle and the wick of this bullish candle. You see the way swing highs and swing lows, I tell you to use three candles, where if it's a swing high, the first candle's high should not surpass the middle one, and the third one's high should not surpass the what the middle one also, which is the middle one has to have the what? The highest high. Do you understand? And when it's a swing low too, the first candle's low should not surpass the middle one, and the third one also should not surpass the middle one. Therefore, the middle one has to have the what? The lowest low of what? Wicks, making it a swing low. That's the same way for fair value gaps. We take three candles. This candle's high, the first candle's high, and the third candle's what? Low. They should never meet. You see, this high and this low, they don't meet. Sorry. This high here and this low here, they don't meet. So the gap that creates in between them is called what? It's called what? It's called a fair value gap. This thing is called what? A fair value gap. You see the way price comes for what? Retest the fair value gap. It retests the fair value, and what does it do to the fair value gap? It bounces off. Do you understand? Therefore, it gives what? It uses the fair value gap as some form of what? Support. For those support and resistance traders. So they will say that what? This is a area of what? Support. Therefore, they'll be looking for what? Higher prices at this area, or they'll be looking to buy at this area. So this is what? A nice what? So we call this what? A bullish fair value gap. The reason why I refer to it as a bullish fair value gap is because the middle candle is what? Is a bullish candle. You get me? So now let's look for more fair value gaps. You see this gap here? This candle's what? High, and this candle's, and the third candle, which is what? This candle's what? Low, and this candle's high. They never meet. That's a fair value gap. Okay. This candle's what? High, and this candle's what? Low. They don't meet. So the candle that created the fair value gap, now it is it's now acting as a what? As a high for the next candle, and the third candle here is low. Like they don't meet. So the gap here is called a fair value gap. Do you understand? And you can see that the 1 year also, there is a small high here, then there is a small what? There is some low B here, sorry. There is a low here, okay, there is a high here. You see, they don't meet. So the gap that creates in between is called what? A fair value gap. Okay. One may ask, why is it that price came here, it respected this fair value gap, but it didn't respect what? This gap here and what? This gap here. Okay. One may ask, why, like why? Okay. We have something we call the breakaway gaps. Breakaway gaps, price never comes there to retest them. Like the 1 year and the 1 year. Do you understand? The 1 year and the 1 year, it will never come there to retest it. And I'm sure at this area here, if you go to what a lower time frame, you'll find a what a swing glue around this area here where price is trying to take liquidity from. Okay, trying to take people's stops where people have played their stop loss. I told you below swing lows, they are what sell stops, and above swing highs, what are they? Buy stops. When I talk about buy stops, people have put their stop losses there. So something like this is a swing low. This candle's low, this candle's low. They don't surpass the middle candle's low. So this is a swing low. People have put stop losses here and they are buying. You understand? Price comes down, takes off their liquidity, and I'm sure on the lower time frame we find some liquidity levels here, takes it off and goes up. Do you understand? But this thing here is called a breakaway gap. Price never comes to retest it. It might retest it somewhere later in the future, but right now it's not going to retest it. It will just retest this fair value gap and just push up. You understand? And the thing is that you can see that the buying pressure is too much. We are just pushing price up higher, 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 higher. You can see the expansion moves. Price will just expand, retrace, expand, retrace, expand. If you remember the expansions and consolidation, the market profiles that I taught you. Okay, so these are what bullish what fair value gaps. Now, when we talk about bearish fair value gaps, it's the same thing, but it's the opposite. So you can see this candles low here and this candles what high. They don't meet. So this thing is called what? A fair value gap. But what form of fair value gap? It's a what? It's a bearish fair value gap. Do you understand? A bearish what? A bearish fair value gap. Okay. So this is what a bearish fair value gap. And how do you know it's a bearish fair value gap? The middle candle where the gap is forming, it's a bearish candle. My bearish candles are black, my bullish candles are green. So your bearish candles can be what? Red, and the bullish candles can be green. So the gap here is called a what? It's a what? A bearish fair value gap. Do you understand? So if I take another one here for you, you see that what? This candle's low, this candle's high. They don't what? They don't meet. So this thing is called a what? It's called what? A bearish what? Fair value gap. Do you understand? If you want to actually know this thing by heart and really be good in it, you need to go to your chart and be finding them out. And whenever you find them, take screenshot of them and keep records of them. Do you understand? That's how you know that what you are learning. Do you understand? So you see, I can just notify I can just spot them easily on my chart without sweat, without breaking sweat. Do you understand? I just notify them. I can even I've seen I know I've missed a lot of them down here. There's a gap here. Okay, there's a fair value gap here. There's a fair value gap here. There's also a fair value gap here. Okay. But I'm just trying to show you what it looks like. Okay. I'll teach you how to use them and the ones that are higher probability, because we want how to spot higher probability fair value gaps, how to spot higher probability what breakup blocks, and how to spot higher probability other blocks, because we need those higher probability things to make money. As the saying goes, not all that glitters is gold. So it's not all fair value gaps that you see that you be trading. Not all other blocks that you see that you trade, and not all breakup blocks or swing highs and swing lows that you see that you trade. There are some key specific PDR rates that what you have to trade them, and you have to set, and they always print on the chart every day. But that doesn't mean every day you should go into the chart and be trading. Day trading is not an everyday trading. It's very simple. Day trading is not an everyday trading. When we talk about day trading, you don't go into the chart to be trading every day. The less you trade, the better you become. Trust me. If you want to be a very good trader, the less you trade, the better you become. The more trades you take, you just try it. Just keep on trading like 20 times a day, 20 times a week, 15 times a week, trade like 10 times a week, and trade and try trading. Take 1 month, trade like 10 times a week on your real account. Take another 1 month, then trade very less, like twice a week. and you see that the one that you trade very less, you make more money than what the one that you trade what so much. It's that simple. Less is more, quality over quantity. You should what filter your trades to find what quality trades. Do you understand? Yes. And we are all what learning to become what good snipers, good forest snipers, so that what we won't just be what issuing orders and what positions anyhow like machine gunners. We want to be what prolific snipers. Find what like filter out what the bad trades and take out what the good ones. And whenever we take out the good ones, we are hitting our TPs. Yes. So now I'm done with the PDRs. No, sorry. It's left with the last PDR, the breaker blocks, which is one of the best. It's one of the best PDRs that I would ever recommend for someone to learn. The breaker blocks. It's one of the best algorithmic PDRA that has helped me. Yes, I won't lie to you. It has really, really helped me a lot. One of the best algorithmic PDRA. So, so the breaker blocks, they are one of the best. Okay. So what do I mean by a breaker block? Okay. A breaker block is when price is what? Let's say price is what? Creating what? Lower low, lower highs, lower low, lower highs. Okay. Okay. Then it changes to create what? Or it changes what? Market structure. Then creates what? Higher highs, what? Higher lows, higher high, higher lows, higher high, higher low, higher high. Okay. At the moment where it took what? The liquidity here to change what? Structure by going above the swing high. The last, since this is what? From a downside to an upside. The last, okay, I would say the last bullish candles, okay, before the down move, which this is the down move, okay, this is the down move, this down move from this point here to this point here, and it took what? A liquidity. The last bullish candles are inside what? This leg here, okay. So the last bullish candles, okay, they are inside this leg. They are the breaker blocks, okay. And how do you spot them? You spot them when what? This move here has taken liquidity and has gone above what? The breaker blocks and what? Closing above it. That makes it what? A breaker block. So let me find one here for you. Look at something. You see, price was coming lower, 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 lower. Let's say from here to here to here, okay, to here, okay, then to here. Then what does it do here? It goes above here. Do you understand? So you can see that what? We were coming lower low, lower high, lower low, lower high, lower low. Then we created a higher high. So we've changed what? We've changed from what? A bearish trend to what? A bullish trend. So at this point here, no, the last bullish candles, which is what? From here to where? To here. Okay. Then if I extend it, let me remove this one. So the last bullish candle or candles, okay, before the what? The down move that took what? We call this thing a stop hunt. Okay, or you can call it what? A swing low. The last what? Bullish candle before the down move that took what? A stop hunt. You understand? And when price what? Displaces what? And closes above what? This breaker. If you look at this box here, which of the candles here closed above it? This candle here almost wicked it. This candle here almost wicked it. This candle here wicked through. This candle here wicked through. But this candle here, it did what? You know, a bullish candle opens where? Opens at the bottom, goes to the low, comes to the high, then closes here. You see where this candles closes? It's above the what? The breaker block. So this is a candle. This is the candle that closed above the breaker block. That's what? That when this candle closes above this breaker block, it validates that what this is what? A correct what? Breaker block. Do you understand? Therefore, you can trade this breaker block, and you can see how. Let me try something here. Okay, you can see just how nice uh price respects the what? Even though you have some form of what? Drawdown, you get some form of drawdown around this area here. You can just see how price what? Respects the what? The breaker block to go up. Do you understand? So I call this the breaker. Okay, so you can see how just how price respects the what? The breaker. Do you understand? If I put my stop loss here, you can see just see how price respects the breaker and moves to what, to our TP level, even though you get some form of drawdown here. You get me? Yes. So the breaker block is one of the best algorithmic what PDRA that you can use to trade. I will never lie to you. It's one of the best. Okay. So let's search for more breaker blocks. So okay. Okay, you can see that this low here, it took out this low and this low. So we can see that this is a what? This is a stop hunt. Therefore, that is a stop hunt. The last what, bullish candle. Okay, the last bullish candle before the down move, which the two candles here, the down move, that took what, liquidity. Okay, so the last bullish candle before the down move, that took what, liquidity. When price closes above it, this candle withdrew. This candle wicked them off. This candle closed through. Do you understand? Yes, and price didn't what? I think price never returned back to it. Okay, but still, it's what? It's a breaker block, and you should know that what, nothing is 100% what, nothing works 100% in the forex market. If you think there's any holy grail out there, or someone is lying to you that, oh, I have 100% win rate, then that's not true. Okay, it's so good to be true. Okay, so now you see, I spot breaker blocks without what, without sweat. You understand? Because I've done it over and over and over and over and over again. So you can see this is a stop hunt. Price goes through it. You see, we're coming what? We're coming from what? A downtrend. A downtrend. We created a what? A swing low here. We went up. Why is it that when we reach here, we didn't continue the downtrend by what? We went above what? This swing high. So after going above that swing high, we close through it, and this candle close through it. Then when this candle closes through it, it confirms that what, this is a valid breaker, because we've taken liquidity here, we've closed above the breaker. Now, if you buy around this area and put your stop loss here, you hit your what, a nice TP, even if you are going to go through what, some form of what, drawdown. That's what I mean. When you what, you put your what, your order around this area here, then you put your what, your stop loss level around this area here. You be what, some form of what, drawdown. This is called some form of drawdown. Okay, but eventually you hit your what, your TP. That's if maybe you are doing some 1:2. Okay, if you are doing 1:2, you will have hit your TP nicely. Do you understand? So that's what the breaker block also does. So if you don't understand anything, rewind the video. You can put it in the comment section or even text me personally. Okay, about what you don't understand, and I'll elaborate and what, speak more on it for you. I'll show you images and pictures and do it personally for you. That's if you text me. Okay, so this is what I wanted to bring out here for you people today. PDRs. Okay, they are very, very good, and the PDRs are used as swing high, swing lows, fair value gaps, and breaker blocks. Okay, but there are so many PDRs. We have swing highs and swing lows. We have order blocks. We have fair value gaps. We have breaker blocks. We have mitigation blocks. We have proportion blocks. Yeah, a lot of breaker blocks. Sorry, a lot of PDRs. Okay, so we call them premium discount arrays. And the reason why we call them premium discount array is because price moves from discount to premium and premium to discount. Okay, so let's say around this area, let's say if you take this price leg, when I talk about this price leg, you can see that what this a bullish a bullish move to the upside, then we retrace. After retracing, we took what, liquidity, because this is a swing low, and I told you below swing lows what are there, people stops are there. Some people be someone in somewhere in someone in the world somewhere has placed a stop loss around this area here. Price comes to grab the person's what, stop loss. So we've taken liquidity. The moment we grab stop losses, we are taking liquidity. We've liquidated someone. You can see it like that. We've liquidated someone. We moved up, do you understand? And we liquidated someone around this area here also, because someone is going to sell around this area here and put a stop loss around this area. We liquidated the person. So this is a what? This is a nice what, bullish what, impulse what, swing. If I take that bullish impulse swing, okay, from the low to the high, okay, then if I use my premium and discount, okay, below 0.5, 0.5 is 50%, but I do it 0.5. Okay, so below 50% line, which is this red line, is called what? It's called discount. Okay, so we have discount. Okay, and above the 50% line is called what? Premium. Okay, so we have our premium what zone. The whole of this area here, everything above the 50% is called what? Premium. Everything below it is called what? Discount. Okay, so I want to teach you people why we are calling PD arrays. That's the reason why I'm doing this. So now we have what? Our premium around this area, and we have our discount around this area. So everything, every PD array you find around this area here, you find in this price leg here, any PD array is called what? A premium what? PD array. And what does a premium zone mean? A premium zone means resistance. If you've ever done support and resistance before, when we talk about premium zone, we're all talking about selling, 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 selling. Okay, let's say you go to the market, okay, and you are going to buy something, and you go and there's a discount on it. Won't you buy? You buy because there's a discount on it, which means what? Cheap price. So we always buy in what? Discount. You understand? Which means that everything below the discount level here is what? Support. You are trying to support price. You are trying to buy something. You want to buy something. That's the same way if you're a trader, or let's say you're a market what? You're a market man or a market woman, and you sell stuff. Do you understand? And you go to the market, and now the government is giving you new prices on your stuff in premium. Which means that what? When people come to buy from you, they'll buy it at what? Higher prices. Which means what? You the trader that what you are selling, you make more money. That's the reason why what? In premium zones we do what? We sell. Because what? We are selling at premium. And we always, as a forex trader, we always want to buy at what? Discount and what? Selling premium. Do you understand? That's why they always tell you that what? Buy low, sell high. I don't know if you've heard something like that before. So in this discount zone, I can see a PD array like what? A fair value gap here. Okay, that's supposed to support price. Do you understand? This is a fair value gap that's supposed to support price. Okay, there's another fair value gap here, but that's not my concern. My concern really is the other block I'm finding here. I told you that what? Other block is the last. If you want to what? This is a what? A bullish short move to the upside. So if this thing is what? It's an other block because it's the last what? Down close candle. It's not candles because you can mark 1, 2, 3 because the green candle is here. It's separating what? This two from this one. So we mark the one closest to what? The leg. So the whole of this. Okay, sorry. So from the other block here to here, okay. So this is a what? This is a what? This is a bullish what other block because a bullish order block supports price to the upside. And you can see that what? This bullish order block here is found in what? In a discount zone. Do you understand? It's found in what? In a discount zone. And what does it do to a support price? This fair value gap here has been disrespected because you can see that what? It was trying to support price to the upside, but eventually price traded and what? Closed. All of them were working, but it was only this candle here that closed because a bearish candle, that's what? It opens at this area here, goes to the high, comes to the low, then what? Closes. So the close is what? Below the rectangular box. So it has closed through the fair value gap. Do you understand? You can rewind the video and listen to what I say. Do you understand? And practice with it. So this fair value gap here has been what? Disrespected. So we don't need that PD array. The next PD array is what? This fair value, sorry, this other block we find here. Now this other block here is being what? Is supporting price to the upside. Do you understand? It's supporting price to the upside. So this here is called what? Another block, and it's called a bullish order block. Okay, come. Let me change this thing here. It's too faint. So this is a what? Another block, a bullish order block. The plus by the other block shows that what is bullish. If you see negative, it's what? Bearish. So this is a what? A bullish order block that is supporting price to the upside. Okay, and you can see that what? When price touched the other block, what did it do? It ran to the upside to come and clear what? Liquidity at this area here. Do you understand? It took the liquidity there. After taking liquidity, what does it do? It falls because here is also what? A PD array. I told you swing highs are PD arrays. So you see, market is always moving for what? Liquidity to liquidity, PD array to PD array, PD array to PD array. Don't let anybody lie to you that market is always moving for what? indicators and support and resistance and all that. No, market is moving from what? Liquidity, clearing people's stop losses. And it will move to the other side. Clear people's stop losses, move to the other side. Clear people's stop losses, move to the other side. Respect a PDRA, move. Respect a PDRA, move. So the reason why I call it premium discount array is because this other block was found in what? In a discount level. Do you understand? That's the same way if something was found in a premium level to what? With this price lower, we will call it what? A premium what? A premium what? PDRA. So this other block is a what? It's a discount or PDRA. Anything found here is called what? A premium or PDRA. So a PDRA, we can have fair value gap, swing high, swing lows, other blocks, mitigation blocks, all in the premium level. And you can find the same thing: swing high, swing lows, fair value gaps, other blocks, mitigation and proportion blocks, everything inside what? The discount level. You get it? Yes. So that's basically everything. Okay. So that's why we call it a premium a PDRAs. It's that simple. So you can play the video over and over and over. Anything you don't understand, you text me and I'll teach you. Okay. And this premium discount arrays, the only ones I use are what? Swing highs, swing lows, fair value gaps, and breaker blocks. That's it. I don't use any other premium. I don't even know what I know what they are. I know what other blocks are, like how I'm teaching you right now. I know what they are. I know what mitigation blocks are. I know what proportion blocks are. I'm mentioning them so that you can go and research on them. Go to people's other YouTube channels and search, oh, what's the mitigation block? What's the proportion block? Like, what other PDRs are there? Do you understand? Learn on them, because when you're able to find what works for you, and I'm teaching you more advanced stuff like in later videos, you can apply the PDRs you've learned to it. Then be like, oh, okay, that's how you make up your own model and trade with it. You don't copy people's what models and trade with it. Do you understand? Yes. You need to do something that works for you, because we are all different and we all think differently. What works for me might not work for you. You might see me making money with it, but when you trade it, you always be losing. That's how forex is. It's a language. If you don't understand your own language, you can't come and understand someone's language. You need to understand your own language. Create a language for yourself and understand it. You understand? That's what the forex market is. Okay. So thank you for listening to me and have a good day.